Welcome to Coffee with Marcus Mark, the number one stock market show on Spotify and one of the most popular market updates on YouTube. In this show, we talk about what's happening in the markets and how we're trading them. Today is Thursday, July 6th. The sell off is here. A huge job surprise. Traders say a rate hike is almost certain in July. Treasury yields spike and JetBlue tumbles. Plus, we'll take a look at wheel trades we considered today. As you can see, there's a lot to talk about. So let's go ahead and get started. If this is your first time here, my name is Mark Hodge. I'm head coach at Rockwell Trading, and I'm running the show solo by myself today because I care. On most days, I am joined by Rockwell Trading's founder, Marcus Highcoder. It's not that he doesn't care, but he's on this epic world tour with his daughter, doing some last time sailing regattas with her, actually in Boston. No, Chicago today. Anyway, he's doing a lot, and I'm filling in for him. But I promise that you are in good hands. You could say we have a ton of trading experience here at Rockwell Trading. We know our stuff, and we're not afraid to tell it like it is. If you're looking for some honest insight into the world of trading, then you are at the right place. Now, before we dive in and show you our trades and how we're tackling these crazy markets, let's take a look at what's moving the markets today. Let me go ahead and bring up the S&P 500. And yesterday, we see here that just going back a little bit, kind of a quiet, muted start to the holiday week. A short trading session on Monday, markets closed Tuesday. And then yesterday, we finished just a little bit lower. The S&P down 0.2%. The Dow yesterday down 0.4%. The NASDAQ down 0.2%, just like the S&P. And there really wasn't a whole lot of volatility or market movement, with the focus being on the Fed's minutes from their from the June's Federal Reserve policy meeting. So those minutes really just showed that most officials would support rate increases, and that's what we heard. That was what was known after that meeting. So no real surprise there. With that, there really wasn't a whole lot of movement or volatility, but we mentioned that this week the focus is going to be on jobs. Let's go ahead and go to PowerX Optimizer, bringing up the economic calendar. Today we had ADP non-farm employment numbers coming out. We had unemployment claims coming out, the JOLTS job openings report, and then tomorrow is the big jobs report. Now, this morning, though, we had a huge surprise here. If you look at ADP non-farm employment numbers, 497,000 jobs were added in June. This was just crazy, totally unexpected, more than double the expectation of 226,000 jobs added. Also, much higher compared to the number of jobs added in the private sector in May. So this was a huge surprise. Now, what does this mean? Well, it means that the Fed can definitely raise rates, right? The Fed is doing a balancing act between trying to fight inflation and trying to do things from an economic policy perspective that will help drive inflation lower, which is going to hurt the economy to some extent. And that is their concern, crushing the economy with their policy. But right now, the economy has been absolutely resilient. Jobs are there. Here we see just a huge job surprise. And if we go and look at the CME FedWatch tool to see what the probabilities are for a rate hike in July, and we see here that now 49.9%. Now, a rate hike was pretty much expected anyway, but this just gets, starts creeping higher and higher towards 100% certainty, and the data supports it. And this is what the Fed said. Hey, we're willing to raise rates not only a quarter point, but a half point. That was really the expectation, that traders really weren't expecting the half point consideration. Now that quarter point is pretty much priced in. Getting up another quarter point, still traders kind of shrugging off the potential or possibility that we will see another quarter point after this July rate hike. Right now, probability still showing that the Fed will keep things the same until May. To be honest, though, the Fed has or traders have underestimated the Fed once the Fed got into this rate hiking campaign that went for 10 consecutive hikes before the pause that we saw. So, hey, the economy right now supporting the Fed raising rates more to combat inflation. And because of that, markets are down today. So the S&P down 1.3%, the Dow down almost 500 points, 1.4%, the Nasdaq down 1.4%. So some selling taking place, and if we go back over here and we look at the heat map, we'll see that it's really selling across the board, right? So look at all of this red here. We see that there is selling in technology, uh, all tech stocks are down. So it's not just Nasdaq, but also real estate, energy, consumer defensive, consumer cyclical. Just a handful of green, Meta being one of them. But for the most part, just down across the board. So it's not the magnificent seven, some selling and profit taking place there, or the magnificent seven doing well, and then some profit taking or selling or weakness in other sectors. It's really just across the board. Now, this morning we also had a Fed member speaking, and Fed member Logan, she said that she's the Dallas Fed president, and she said that she was one of the central bankers who thought it would have been entirely appropriate to raise interest rates again at the June meeting. So some members thinking that the rate hike campaign should have continued rather than pause. Right now, though, traders expecting that we'll get another quarter point at the July meeting. Now, because of this sell-off, volatility has crept up again. So fear is in the building. The VIX up 18.6%, getting back to levels that we really haven't seen since May, the beginning of June. And this is exactly what we want to see for option selling. So trading the wheel, I'm loving this volatility and the spike. That's definitely what I want to see. We're going to take a look at opportunities that we considered today in a little bit, but this helps with new opportunities, and there was a lot to consider. Looking forward to a little more volatility continuing. I mentioned yesterday that I would welcome a pullback at this point in time. That just will give me an opportunity to redeploy some buying power and funds, take on some new positions, because at those highs, I just didn't feel comfortable. I didn't see a whole lot of opportunity to put money in at those highs without a pullback taking place. So I'm loving this pullback, especially for my trading style and my trading plan. So markets down, but one thing that is up is the 2-year yield. Look at this. So back in March, when we had the regional banking crisis and that fear hit, the 2-year yields and yields in general just quickly dropped, sank, got down to 3.6%. Right now, back above 5%, creeping right back up. And today, look at this, hitting highs. I actually need to go to a weekly chart here because we don't see it on a daily. If we look at a weekly chart, we are hitting highs with the 5-year yield, or sorry, the 2-year yield, probably the 5-year yield too, but the 2-year yield definitely highs that we have not seen since 2007. So crazy move in the yields. Of course, with the Fed starting to raise rates, yields went higher, but now the highest that we've seen since 2007. So a big move there. Let's take a look at a few market movers before we look at possible trades to consider. And let's look at JetBlue. So JBLU is the ticker symbol. Now JetBlue down 6.5% here. Let's go to a daily chart. There we go. Taking a bit of a dip after a nice run in June. And this drop coming after the company announced it would end its partnership in the Northeast United States with American Airlines, and that it's going to focus on its relationship with Spirit Airlines. And that traders don't seem to like. Now, American Airlines, AAL, also down 3%, not as much as a JetBlue is. Spirit, let's see what Spirit looks like. No, it's Save. It's Save. That's right. Save is the ticker for Spirit Airlines, and basically flat. So actually getting a boost and opening higher, even though markets were lower, while the markets are down. Save just really positive for the session, you could say, based on what we're seeing in the other airlines. So airlines are on the move just a little bit, at least those three. Let's look at another market mover, and let's look at Meta Platforms. You saw there on the heat map that it was one of the lone stocks in the S&P 500 that was actually green, up 0.5% today. Now, this comes after the launch of Threads, which is a direct competitor to Twitter. So with Mark Zuckerberg and this battle with Elon Musk and Twitter, Zuck is trying to compete and maybe take away some of those people who have been unhappy with Twitter and Elon Musk's policies and some of the changes that he's made. So we'll see what this has to do long term with the influence on Twitter and if they can compete. But there was a mention here that early Thursday, 10 million people had already signed up for the platform since launching. So off to a pretty hot start. Meta up and positive while the overall market is down. Now let's go ahead and go over to PowerX Optimizer here. Looking at PowerX Optimizer, I'm going to go to the wheel analyzer because when we have a down day, it's a great opportunity to sell puts. And there were quite a few things popping up on the scanner. Now I have my conservative scanner looking for more conservative strike prices. There's also the more aggressive scanner. I'm going to do this. I'm going to show a few stocks that we looked at today. And I'll be honest, I took a trade that was different from Marcus. I actually message Marcus. We were joining our mastermind group call together. So he was with me. We were looking at opportunities together. He had to head off to the sailing regatta where he was going to hop on a boat. He wasn't able to put on a trade. I messaged him. I said, hey, do you like this one? He said, yes, that's great. I put on a trade for him, and we are in different trades here. I want to look at a few that we considered today, and then I'm curious, provide your feedback, make a comment. What trade did you take if you took a trade? And if you didn't take a trade and you're looking at what we're considering today, which one do you like best? What do you think Marcus took? What do you think I took? And we'll see what the feedback is. We'll let you know tomorrow the trades that we actually placed. Let's first take a look at the first oil and gas play that's popping up on the scanner. This is Devon, DVN. So Devon Energy right now on the scanner, the 45.50 strike would give us 32% annualized, selling that strike price for July 14th. Now, Devon Energy, we look at this chart, has some ranges based on our lowest close indicator. We're at 46. Right now, the strike would be 45.50. So this one pretty decent. PE ratio of 5.37, a dividend yield of 9.46. So when we're analyzing stocks, we like to do a quick snapshot of the fundamentals, looking at the PE ratio, looking at the dividend yield, also the income statement, both annually and quarterly. So quarterly, we see 5 consecutive quarters of net income and profits. That's a good thing. We see here that looking at net income annually, we had a little bit of a loss in 2019. We had a loss in 2020, but for me personally, I shrug off the loss in 2020 because crude oil, if you're new to, if you weren't trading around then, crude oil actually went negative. it was just a crazy time during the beginning of the pandemic. And because of that, 2020, I think, was a total outlier for oil and gas, and I could shrug that off. So, not really considering 2020. Profits and net income for 2022, 2021 strong, a little bit of a dip in 2019, and then 2020. For me personally, I could shake that off. Now, a few others to consider. They're probably on the aggressive list right now. Let's look at let's look at MPC. So here's another one, Marathon Petroleum. Now you'll see here that the stock strike price to sell is 111. We see that our lowest close indicator is what 105. So strike's a little bit higher here. Annually, also a negative 2020. Although the other 4 years were positive. We could look at quarterly net income, 5 consecutive quarterly profits, PE ratio of 3.6, dividend yield of 2.65. So another one in the running. Let's go back and let's also look at Oxy, another one that we were considering today. So Oxy here, right now, a strike of 57 is available. So Oxy has a PE ratio of 6.78, a div yield of 1.26, quarterly net income, 5 consecutive quarters of profit. Annually, we look at similar to Devon Energy, a little bit of a negative 2019, a 2020 negative year, which again for oil and gas is a pass to me. The 57 strike right now gives you for next week 44% annualized, some nice premium there. This is what the chart looks like for Oxy. So we could also take a look at MRO. MRO, 2150 strike is available. MRO, PE ratio of 5.57, a div yield of 1.81. Looking at the income statement, annually, 4 out of 5 years positive. MRO actually having a positive 2019, unlike Devon and Oxy. Negative 2020, just like other oil and gas companies. Quarterly, 5 consecutive quarters of profit. And this is what the MRO chart looks like. So 2150 right now popping up. This was another one that we were considering. And then we'll also look at Suncor. Suncor, right now, strike of 28 available. And Suncor has a PE ratio of 6.49, a div yield of 5.48. If we look at the income statement, 4 out of 5 quarters positive, a little bit of a negative quarter in September 2022. Suncor made money in 2019, just like MRO, 2020 negative, again, because of the pandemic. So those are 5 oil and gas plays to consider. We had one of them, I'll be honest, I do not like. But I mean, I think they're all decent to consider. And we had Devon Energy, right? So let's look at this chart again. Devon is a possible candidate popping up on the scanner. We had Marathon, MPC as a possibility popping up on the scanner. We had MRO as a possibility, Marathon Oil popping up on the scanner as a possibility. And then we were looking at Oxy, a possibility of 57, and Suncor, a possibility at 28. So just curious for those following, what stock do you like best that we looked at? 5 oil and gas plays. I'll be honest, there's one that I think is the weakest of the bunch, that isn't my favorite. I took a trade with one of those 5. Marcus took a trade one of those 5. I think they're all decent considerations, but I do have my preference. What do you think? Did you take any of these? Are you considering any of them? And which companies do you think Marcus and I traded? We'll let you know tomorrow. Until then, though, gosh, an interesting day. We'll see if the sell-off continues. Let's go back to the S&P 500. right now still sitting near session lows, down 1.4%. Remember, we still have a jobs report tomorrow, right? So jobs right now move in the market. And tomorrow we have the big jobs report, the monthly jobs report with average hourly earnings, non-farm employment numbers, and the unemployment rate. So that's going to do it for today's video. If you liked it, please give it a thumbs up. Feel free to leave your comments. Let me know what you think about those trades, which one you like best, which one you think Marcus took, and which one you think I might have taken. And we'll see you tomorrow. Until then, happy trading, everybody.